I tweak the multiples about every 6 to 9 months. And I've been back testing them, and I'm getting ready to tweak them again based upon the increased volatility in the market. I think we can make them even more accurate. I think I can make them better. I'm always trying to I don't want to, if it isn't broken, I don't want to fix it, but at the same time, we can always do better. So these get tweaked every 6 to 9 months. And they're about to get tweaked again for the fourth quarter. So if you're thinking about subscribing, if you're thinking about coming in, we're going to upgrade the volatility levels. And I go back over the two sides of them, the ones I'm using now and the ones I'm going to be using for the next 6 months. And the new ones are better. They're a little more accurate, and they give us nice little kisses up and down a little bit better. So that's for So even the guys in the chat, you guys can look forward to that. That's coming. Now, so we look at the day, and what do we see here? I see an upper volatility level at 28.75, 1128.75, and a daily pivot sitting just above here at 1130.16. That's within 2 handles. So that to me, we're going to call that a zone. Yes, Grant. 2 things. This is being recorded, and my understanding is we're going to be there's a PDF of this that we're going to be giving out to everybody. So no worries, you can get a PDF of this. So as this approaches the upper volatility level and daily pivot, my thinking absolutely is not to buy. I'm not looking to buy because the buying is happening. I'm looking to fade it. Bill Blunt, one of the guys in the room, has a great term: first passes or fades. That's his term. I got to give credit where credit is due. It's absolutely true. The first time up, invariably, it's going to fade. It may only fade for a handle. It may fade for 5, but it's going to fade. It's going to fade, and you need to be there. So as we come up to the upper volatility level, you see this long candle. And I don't have it up here, but I will tell you at the same time, the ticks start going over 1,000. And Yuvi will explain that later. So we're coming into a level, the ticks are high, we're going to get short. So the most important question is, I lost my thing here. Oh, there we go. Okay. All right. Just yell, hey Mike, you lost your slide. So we're still here. We're up in this area, and we fail at the upper vol. So I'm short here. Where is my stop? Where's my stop? It is just above the daily pivot, and that ended up being a two handle stop. So I know that I'm wrong if we break out above the daily pivot. So my risk is contained. I'm short, and we're going to see how it goes. So down we go, coming into the opening range low. Short near 1145. Okay, yes. I've got the right slide. So we're coming down into the opening range low. And you've got to respect the opening range when you're trading these things. And my trading philosophy is I will take a short, I'll have my 2 handle stop. When I get 2 handles into a trade on the upside, my stop goes even and I take a third off immediately. Okay? I'm profitable and my risk is out of the trade. I'm looking for the short because the market was unable to get over the upper volatility level and additionally unable to get through the daily pivot. But my initial key is the upper vol level here. It couldn't do it. So that gets me in. So if I get positive in a trade, I get a third of it out. And I get my stop to even. And then I roll down as we go. My biggest sin in trading is I get out too early. I turn larger winners into smaller winners because I just exit too early. My thought is I would rather have a lot more smaller profitable trades than waiting for that one home run trade. And that is just from my newbie trading time, where I would turn winners into losers invariably. So I've got that. You have to know yourself as a trader, and that's exactly where my brain is coming from in that regard. So I will pull it off. Let's go to the next slide. Okay, so you've got to respect this opening low here. 11.1375. We couldn't take it out. We make a higher low. Now this says cover and reverse long for a second run at the volatility level and daily pivot. You can absolutely reverse long. There are days when I do and there's days when I don't. And honestly, it's just if I feel like scalping on that particular day. In this particular case, I did cover and go long. And the main reason I did is because while first passes or fades, the second time up, if it's going to run, it tends to be able to do it. So I want to be long then. And I've got an exit point here. The stop should be below the opening range low. Because at that point, if you're long, you're wrong. You break that opening range low, then we're going to start talking about the lower vol level at 110.25. Okay? So again, your risk is limited. It's all about limiting risk. I mean, if you're going to hang around for a long time. I've talked to, one of the things I like to do is talk to guys that have traded for 10, 20, 30 years and ask them how they do it. And they all invariably say that the number one thing that goes on in their mind when they take a trade is what's my risk and where am I wrong. So I really try to model my trading after that. If you trade well, the money's going to come. But the most important thing is not to let a big loss erase all of those good trades, because that will absolutely happen. And it's going to happen anyway, but to the extent you can keep it in the forefront of your mind, you'll be better off for it. So we get long here, we head back up into the vol level. Now, so we're back. And it's still not acting very well. What you would like to see is another big strong candle here on the 5. You're not getting it. You're getting a doji. The ticks were acting up again. Not huge tick numbers, but I think they were at least 900 going into 1,000. So that gets my antenna up that it's time to take some more off. So we go up here and we fail at the daily pivot. So first time around, we fail at the upper vol level here. Second time around, we fail at the daily pivot. So the zone is working. We had good ticks, like I say over here, copy candle, and I'm short again with a stop above the daily pivot. Your stop on this trade can be even tighter than the stop on the last short, because the daily pivot, the edge of that zone is holding up. So we're mitigating risk. We're short again. So we're short the second failure at the daily pivot. And I wanted to put this trade in to show a couple of things. Number one, respect the opening range, and that a lot of times with volatility levels, we're trading for 3, 4, 5 handle winners. Okay, we'll get our big winners, and I've got a couple examples of that later. But we get this big old 5-minute candle down to the opening range high. Okay, that tells you that you're right to get short that daily pivot, but to be careful. Why? Because you're still shorting an uptrend. And what I mean by that is this. Here we are at 8 in the morning. Here we go. And we're shorting that. Okay? So be careful, because you're going against the grain. Stop still above the pivot, and our risk is limited. Now, I switched to a minute chart here, so be careful. What we had here was a move down to test the opening range high. Go back here. Make sure I've got my time frame. Okay. We came down to here, and this ended up being a one-handle scalp. And I'm putting this in because sometimes when you trade, that's life. It ends up being a 1 and 1.5 handle trade. You didn't lose money, but it wasn't this glorious winner. Not every trade is, a 20-handle winner. So, and we head back up once again, and this time we take out the daily pivot, and we take out the upper volatility level, and we make one second. I want to get that. Hold on, guys. I want to get the laser pointer back. Okay, I got my laser pointer back. You guys see the pointer? Okay. This time we get above the upper volatility level here, and we make what's called a bias. Okay. And that is the best way I can describe it is if it gets over the volatility level for a particular period of time, it starts to be a bias for the day, and it does that here. So we have a bias, but we don't get long, and this is where I get back to everything coming together in the room, and I hope I'm not being too confusing. But what I want to show you here is how the room kept me from losing on a long trade. When we come back to test this level here, I get long, okay? Because we're testing the upper volatility level, we get long on the bounce. We get up here, and we get this very long candle. And at the same time, UV starts talking about the ticks are here, the ticks are here. And when the ticks get high, UV spont gets bigger and bigger and bigger. And if UV spont starts getting big, you better look out, because if you're going in that direction, it's time to reverse. So we're up here at 1134, and the ticks are getting big. So even though my system tells me that the volatility level gets me long, the ticks are telling me that it's time to go. So we do. That's where the power of the IM comes into play with the ticks. So that's what I mean by that. And the other thing I've learned from the IM, and this has taken some time for me because I really could never get used to the fact of, yeah, I was on the Europe close. Good point. That the getting out of a long could also be getting into a short. It's taken me a long time to get into that, but UV says if you'll sell it, why wouldn't you short it? So that's what we did there, and we rode that down through the daily pivot, through the upper vol, down to the opening range high. It ended up being a nice little trade for us. Okay, and it's not the cleanest trade in the world. I have some very clean trades to show you, but I think it's a real trade. And what I mean by that is it's how the day really goes. You grab a couple handles, you get stopped out, you're up for a handle and a half, you use what all the resources in the room, and you walk away with a nice little short at 1134 down to the opening range high. Because the Top Step IM is a collaborative effort, and it's a fantastic team, and I think that this trade really demonstrates where the team came into play. Okay, stretch pivots. We talked about those. Okay, vol level to vol level. And this is invariably what will happen. You will get trades that go perfectly from, they'll perfectly touch the vol level and move. And that's great. And I have some examples of that I'll show you later. But basically what will happen in real life is that it will come down and get close, which is what it did here. We established our opening range, and we went down to test the lower volatility level. And when I use that term in the room a lot, and I'll say it's going to test the lower vol level, 119.75. And I'm seeing here, down here, guys, this says upper, it should be lower, and that says lower, and it should be upper. So just ignore that. This is our lower vol. This is our upper vol. I apologize. That's my fault. So we test it, and we bounce. And if you could zoom in a little closer, you'll see on the second 1 minute candle, we failed to take out the low of this 1 minute candle, so we make a little higher low here. And that would be my signal to get long. Where's my stop? Below the lower vol level. 2-handle stop. Your trade's controlled. You can even make that below this candle. So it's a very risk-limited trade. And we make that move. So I talked about here 80% rule. And that's kind of how I try to trade my day every day. I'll take 80% of any trade, any move, whether it's 5 handles, 20 handles, 50 handles. Sometimes I'll get the bottom 10% of a move. Sometimes I'll get the top 10% of a move. That to me is gravy. You can get the meat of that move, and you can do it consistently using the levels, and you can maintain, low risk and do that. It's a good way to think of day trading. Trying to catch 80% of a move. If you can do that, 3 or 4 times a day, you have to ask yourself, what would, yeah, exactly, Robert. What would, 5, 6, 10, 12 handles a day, consistent handles a day, do for your P&L? And, it just builds on itself. Now, so we're low here. Our risk is controlled. And, honestly, we take some off as we go. And there's bumps in the road. But your goal in looking, from the volatility level perspective, your goal, once you break back into this opening range, your goal is to go back up to the upper vol level. And I've already told you guys my biggest crutch as a trader is to get out of things too early. I didn't catch all of this, but there are guys in the room that do, and it thrills me when I'll get pinged on the side and they'll say thanks. That was a 10, 20 handle winner for me. That just makes my day. Even more than anything that I'm doing in my account. So we get up here. Up to the upper vol, 1136.25, and we get another long candle here. Another long candle. Picks your high again, and and it tells you that it's time to go. And we go from 1136, we go from 1121 to 1136, so 15 handles. If you get 12 out of those 15 handles, that's 80% of the move. You can't ask for much. You can't ask for much more than that out of a trade. No trade's going to be perfect. You will bottom tick trades. You'll top tick trades. It's kind of like getting a hole in one in golf. You'll remember that day, for the rest of your trading life. But if you concentrate on getting 80%, your consistency will improve, your risk management will improve, and you'll see an immediate boost in your P&L. And what's most important is you'll see a boost in your P&L that's sustainable versus a P&L that's chopping around, like the VIX on a rough day. You want your P&L to look like, a really boring chart of General Mills, just kind of going from the lower left to the upper right and just kind of cruising along. And being able to mitigate risk and focusing on that can do that. Karen, my initial stop would have been 2 handles below the upper vol. Once I get up here, once I get 2 handles into it, then I'm at even, and I'm taking a 1/3 off on the breakthrough of the opening range low. Okay, so I've still got 2/3 on at that point. And what I will typically do is trail my stop up a couple handles at a time. It really is a trade-by-trade thing for me. I don't set mental stops because my lawyer brain will get in the way, and I will try to tell myself why I'm right, and I will write it into a loser. Okay? Know yourself. So I will trail it up a couple handles at a time and capture as much of the move as I possibly can. Personally, I got stopped out right in here. I didn't catch this last one. I got stopped out right here. Okay. Where are we here? Oh, we're already at noon. Okay, let's do a couple things. Let's look. Now, you want a classic bearish breakdown where a vol level works perfectly. Nothing works perfectly, but the perfect vol level trade for me is when you break a level, and you make a bias, which we did here. This is a gold chart. You break a level here at 1683 and change. The move then comes up to retest that level, okay? Am I getting short here when we make a bias? No. This goes back to we're down 60 handles. Am I going to sell it here and hope that it just kind of goes down? And there's that hope word. No. What I want to have happen, and I'll be the first one to tell you, I have missed trades doing this. I've missed them. I have. Just because I'm really particular about selling weakness and buying strength. I want the retest of the level, and I want the second fail. That's the trade I want. There's guys that trade with me every day that hit me on the side, that catch a little more of those trades, and I'm getting better about getting into those trades more. But I really want the retest of the level. Why? Because it mitigates my risk. When we retest here at 1683.20 rather, I'm short here. I'm short, and it gives me a chance to get into a low-risk trade on gold. Trading gold is like grabbing on to the hood of a car that is going 90 miles an hour on the freeway, hanging on for dear life, and then trying to jump off while landing on your feet. That, to me, in my mind, is trading gold. Okay? And if there's a way I can do that, and limit my risk, I'm there every time. Because you can get huge moves in gold. But you've got to limit your risk, or you're just going to be another one of these guys that just gets blown out in gold on 50 bucks the other way. Don't want that. If I short here, and that is about 1670, my stop is up here at 1685, above the upper vol level. That's 15 bucks in gold. I mean, that'll adjust your day, pretty quickly. So I want the fail here at the lower vol. I'm short here. I can lean on it. I'm confident in it. Once I get a few bucks in the money, I'm even. My risk is out of the trade, and we're going down. And we ended up catching this for about 50 or 60 bucks. It was a great trade for us, and it went really well. But you want that breakdown, retest, and move down. And we focus on these every day in the room. Now I've got another one here, which is a breakdown, through the pivot. This is an ES trade. Now, and there's a lot on this chart, and I wanted a lot on this chart because it's basically what we look at every day. you've got all of the, I'm sorry, Ken, let me go back. You're right. Let me draw a line on that. I'm a lousy drawer, but I'm going to do it anyway. So, we get the retest here, and then you're down here, and you ride it again. And we caught 80% of that move. It was a big trade for us. Okay, let's go here. I'll go back to the pointer. I would draw lines, but I think the last thing this chart needs right now is more lines. So this is what we look at during the course of the day. We got our vol levels. There's our opening range, and we've got pivot clusters below here. You got the 20, the daily, the 9, and the 3-day, and they're all within 10 handles of each other. But what I'm especially concerned with is where the 20 and the daily pivot are within a handle. And they're so tight, I don't even think when we were producing the charts we could get that number in there. So I'm looking at that level, and it's very close to the lower vol. So you've got a support zone or resistance zone that needs to hold. And it runs from 1160, 62.25 down to 1158.17. Okay? So we open up. We establish our low, we break it here, okay, and I am going to draw now. I promised myself I wouldn't do that. We break lower vol here. We make a bearish bias in here. So what are we looking for at this point? Retest. I want a retest. And I get it right here. It's not that perfect one candle retest and fail. But sometimes when you get a retest once, twice, you can be even more confident that it's going to hold. So I was short here with a tight stop. I think it was a 2-handle stop, just above the opening range low. Because we get back into the opening range, you get back up in here, you're wrong. Okay? But again, volatility levels let you limit risk, give you a level to lean on, and you can start to incorporate it with regard to the with regard to your risk management and trying to catch as much of the move as you can. So we get a retest, we fail. Okay, it comes back up to the outside edge of our pivot support zone, and this is where you see the pivots and the vol levels work together. Because you can't just get married to one line. You know, they don't. The E-mini doesn't work in lines. I mean, they're constantly trying to take out everybody's stops all day long. They know where the stops are, and they're hunting for you every time. So we get a move back up here to the daily pivot, 20-day pivot, to the edge of that level, and we fail. And we move lower during the course of the afternoon, and it was a 25-handle trade for us. So we get a lot of 1-handle, 2-handle, 3-handle deals, but I like to say that I think the best way to describe the vol levels, and I think the people that trade with them every day will agree, between the E-mini, gold, and oil, they will give you one outstanding opportunity a day with regard to a fail or a fade or a kiss that runs for multiple handles. And using that in conjunction with picks, handle rule, etc., can make a real difference in your trading. Okay. So we're at 10 after 12. I'm going to open it up to questions. I know Danny's not on, so I'll go ahead and sell this sucker. And I've been trying to explain during the course of my presentation. The top step I am, if you do this every day, Yubi's mic on, Danny? Is Yubi mic in? Yeah, go for it.
Yeah, can you guys hear me?
Thanks, man.
Hey, Mike, nice job.
Go ahead. I'm going to turn my mic off.
Go ahead. No, you. Well, I first wanted to say thanks for